Dirty dealings, corporate battles, consumer woes. This is Evening 5. Home improvement retailer Mr. DIY Group Malaysia is considering listing its Indonesian unit in Jakarta as soon as this year or early 2025, according to people familiar with the matter. Bloomberg reported that Mr. DIY is working with banks on an initial public offering plan, the people said, asking not to be identified. It could seek to raise as much as $300 million, two of the people said, which would give a welcome boost to Indonesia's lackluster IPO market. Deliberations are ongoing, including on details such as size, the people said. Representatives for Mr. DIY didn't respond to a request for comment. Mr. DIY aims to use proceeds from the offering to expand its business, the people said. Mr. DIY has 800 stores in Indonesia after entering the market in 2017, according to its website. In total, it has about 3,500 stores in Southeast Asia. Recently, Mr. DIY Holding Thailand had applied to Thailand's Securities and Exchange Commission for an IPO en route to its listing on the Stock Exchange of Thailand. In a statement, Mr. DIY Thailand said Luang Securities and CIMB Thai Bank have been appointed as financial advisors to proceed with the listing exercise. Its CEO Andy Chen said that this year the company celebrates its 8th year of successful operations in Thailand. He said that it added 121 new stores in 2021, 158 new stores in 2022, and 184 new stores in 2023, equivalent to a compounded annual growth rate of 36.3% from 2021 to 2023. Mr. DIY Thailand is the largest and fastest growing general home improvement and lifestyle retailer in Thailand, with over 77 million customers served annually in 2023. Chin added that the company is dedicated to furthering its expansion across Thailand by broadening product offerings, enhancing the customer experience, and increasing its store footprint. Ex-PM Tan Sri Muhyiddin Yassin will continue to stand trial for 4 abuse of power charges related to the Jana Wibawa program at the Sessions Court. A 5-member bench led by Dato' Aziza Nawawi on Wednesday dismissed the Perikatan Nasional Chairman's application, ruling that the previous bench had the jurisdiction to hear the prosecution's appeal against the High Court's decision to strike out the charges. In maintaining the decision of the 3-member appellate bench that reinstated the abuse of power charges, Aziza noted that Muhyiddin sought to quash the 4 charges without a full trial, which was beyond the Sessions Court's jurisdiction, resulting in him filing the application at the High Court. When the High Court judge invoked inherent jurisdiction to strike out the criminal charges and acquit Muhyiddin, the judge was exercising revisionary powers by reviewing the legality of the charges, Aziza flagged. The High Court can only review and set aside charges, dismiss proceedings, and acquit Muhyiddin through inherent jurisdiction. However, the charges against Muhyiddin were pending trial in the Sessions Court, making Muhyiddin's motion to dismiss the charges led by the High Court to review the charges still under the Sessions Court's jurisdiction, she said. Muhyiddin, as the then Prime Minister and President of Bersatu, was charged using his position to obtain 232.5 million ringgit in bribes from Bukhari Equity, Nepturus and Mamfor, and one Dato' Azam Yusof for his political party. Muhyiddin's lawyer, Dato' Hisham Tepotek, said that the defence respects the Court of Appeal's decision and would study the written grounds by Aziza and decide the next course of action and report the matter at the Sessions Court. Bermaz Auto, which mainly assembles Mazda-branded vehicles, has reported a 30% year-on-year fall in the first quarter of FY 2025 to 70.2 million, dragged by lower sales amid competition. Quarterly revenue dropped 22.3% year-on-year to 846.2 million from 1.09 billion due to lower sales volume from domestic operations. Bermaz said the sales volume was impacted by the launching of several new and facelift models by other marque distributors. The group declared a first interim dividend of 3.5 cents per share compared to 5 cents last year. Looking ahead, Bermaz anticipates the group's performance in FY 2025 to be challenging. The group elaborated that inflationary pressures, ongoing uncertainties in geopolitical conflicts, and weaker global growth will have an adverse impact on the overall Malaysian economy. Vehicle sales, Bermaz said, are impacted by the influx of Chinese-made vehicles. Maybank said on Wednesday that it has invested in Funding Societies, the fintech company that operates a digital funding and debt investment platform for small businesses. In a statement, Maybank said that in conjunction with this investment, it will explore collaborative synergies with Funding Societies to promote inclusivity and bridge funding gaps. Financial and transaction details of the investment were not disclosed. Funding Societies is a fintech company that has disbursed over $4 billion or 17 billion ringgit in business financing to more than 100,000 SMEs across Malaysia, Singapore, Indonesia, Thailand and Vietnam since it was set up in 2015. The company is also backed by Malaysia's sovereign wealth fund Khazanah Nasional and other venture capital firms including SoftBank Vision Fund 2, Golden Gate Ventures and Alpha JWC Ventures. The deal represents the inaugural investment under a new initiative at Maybank to strategically invest and partner with digitally enabled organizations across Southeast Asia. Maybank also said that the investment in Funding Societies is in line with its M25 Plus strategic thrust that aims to accelerate digitalization within and beyond the banking sector. Maybank CEO Datuk Khairul Saleh Ramli said its investment in Funding Societies underscores its commitment to driving financial inclusion in line with its purpose of humanizing financial services. Carsome Group, an integrated car e-commerce platform, announced that it had secured over 200 million ringgit financing line from AMMB Holdings and Maybank to support its expansion plans. The expansion includes accelerating its financing, insurance, after-sales and other ancillary offerings to provide dealers and customers with a comprehensive one-stop solution. Co-founder, chairman and group CEO Eric Cheng said that with the additional financing support and its demonstrated capabilities, Carsome is well positioned to leverage its scale and further expand its business. Cheng said the company has established a strong operational track record with robust in-house origination and underwriting capabilities, achieving non-performing loans below 2% for retail and 0.1% for wholesale. Carsome has continued its profitable growth trend since December 2023, reporting the trading of around 35,000 vehicles and 9% quarter-on-quarter revenue increase to over $310 million in the second quarter of 2024. The company also achieved a gross margin of over 10% and tripled its EBITDA compared to the preceding quarter. Cheng said that this quarter's results reflect its ongoing profitable growth strategy and says that it is on track to deliver a record year.